Well, let's get more analysis by bringing in market analyst Peter McGuire, who joins us live from Sydney. Peter, thank you so much for joining us this morning. So we saw some of the U.S. States restricting business activity after a surge in coronavirus cases, and that affected the stock market on Friday. Do you expect that sentiment to continue this week?
Well, I do in a lot of ways, because quite simply those numbers are ratcheting up. It certainly has the president and vice president very much worried, governors. So that negativity as far as continuing updraft, I think is going to be very, very hard to maintain that push forward. So I think at the moment you'll see possibly a little bit further softness to the equity markets.
And what kind of impact are you seeing on the currency market, especially on the US dollar?
Well, it's still holding in that US dollar index at around 97.5. It's range traded between 96 and 101 over the last matter of 2 or so months. I think it'll possibly move a little bit higher. Risk will come off, so equity markets will possibly flatten out a little bit and possible sell-off, and the US dollar may increase in value.
As I mentioned, we'll be getting the latest jobless rate for the month of June. And of course, we saw a surprise recovery in the month of May. What are you expecting this time?
Well, we're looking at about 3 million jobs for June. That'll still make the headline number about 12.2% unemployment. They'll be released this Thursday. Friday is the public holiday in the States for the 4th of July. So either it's going to be a celebration or one of very dismal Independence Day. And if they hit that number, they may hit more. It's just an unknown. So that's where the market is at the moment, thinking about that 3 million.
Other data that we're expecting this week is China manufacturing. Of course, that economy has started to reopen except for the capital, Beijing. What are you expecting from the numbers there?
Well, I think they'll be relatively strong, and the reason for it is that they've locked down very hard, and then naturally they've had a very strong rebound. So as far as numbers are concerned, they'll be fairly bullish, and they will continue, we think, over the next matter of months. So it's not looking too bad for the Chinese economy on a whole.
And also we'll get the Bank of Japan's Tankan survey later this week, and we're starting to see, I'm not sure whether you can call it a second wave yet, but the number of infections there starting to rise again as well. What kind of sentiment are you hearing about Japanese companies?
Well, it's a little bit flat, and they are getting that rally up again as far as numbers, Greater Tokyo area and so on. So it's going to be, I think, fairly fractured. Japan is moving along okay, but they're certainly nowhere like China was, and it's really, it's going to be, I think, a very, very tough Japanese summer for the economy and for the people on a whole.
Peter, as always, thank you so much for joining us on Asia Business Report.